If you've got money in a 401k, big news just dropped that could change the way you invest for retirement. On August 7, 2025, President Trump signed an executive order called the Democratizing Access to Alternative Assets for 401k Investors. Sounds fancy, but here's the bottom line. For the first time, your 401k could move beyond Wall Street's usual mutual funds and ETFs. Right now, most 401ks give you a handful of choices. Mutual funds, maybe an ETF or two, sometimes bonds, rarely annuities, that's it. But with this new order, the Department of Labor and the SEC are tasked with figuring out how to add alternative assets into retirement plans, stuff outside the stock market. So what's on the table? 6 big ones. First, private market investments, think startups or private debt deals. High risk but potentially life-changing returns if you bet on the right company early. Second, real estate. This could mean buying into funds, lending to developers, or maybe even using 401k money to own rental properties indirectly. Imagine your retirement account actually holding real estate cash flow. Third, crypto. Not direct Bitcoin, but ETFs and funds tied to digital assets. It's risky and volatile, but many investors want exposure. Fourth, commodities, like gold. You might buy physical gold or ETFs tracking it, giving your 401k some protection against inflation. Fifth, infrastructure, lending to the US government to help fund highways, bridges, and major projects. Lower risk but lower reward. And sixth, income products like annuities that pay steady checks for life. Now here's why this matters. Wall Street has had a lock on your retirement savings. Even a small 1% fee compounds into millions over time. Example, invest $1,000 a month for 40 years, average 10% returns, and you'd think you're set. But tack on just a 1% fee and you'll pay about $1.2 million in fees over your lifetime. That's money in Wall Street's pocket, not yours. This executive order doesn't guarantee you'll get all 6 options. The Department of Labor and SEC still need to approve them, and then your employer has to add them. But if this passes, it could mean more independence for everyday Americans, more options for retirement savings, and maybe a lot less money flowing to Wall Street. Of course, with more freedom comes more responsibility. Private equity, crypto, and real estate can be riskier than mutual funds, but for the first time, you might get to choose. This has been your shot of biz, finance, and motivation.